Good morning, everyone. At KBC Group, we recorded a net profit of €1,116,000,000 in the last quarter of 2024. Compared to the result for the third quarter, our total income benefited from several factors, including higher net interest income, increased insurance revenues, and sharply higher net fee and commission income driven by an excellent business performance. This clearly illustrates the benefit of our one-stop-shop customer offering to our income diversification. These items were partly offset by a decrease in trading and fair value income and lower net other income. Our loan portfolio continued to expand, increasing by 2% quarter-on-quarter and by 5% year-on-year. Customer deposits, excluding volatile, low-margin short-term deposits at KBC Bank's foreign branches, were up 2% quarter-on-quarter and 7% year-on-year, with the latter figure benefiting from the successful return of customer funds after the Belgian state note had matured in the third quarter. Operational expenses were up in the quarter under review, but remained perfectly within our full year 2024 guidance. Insurance service expenses were lower, as the previous quarter had been impacted by storms and floods in Central Europe, especially Storm Boris. Loan loss impairment charges, excluding the reserve for geopolitical and macroeconomic uncertainties, were down on the level recorded in the third quarter, leading to a credit cost ratio of 16 basis points for full year 2024, well below our guidance figure. Including the reserve for geopolitical and macroeconomic uncertainties, the credit cost ratio stood at 10 basis points for full year 2024. We also recorded a one-off tax benefit of €318 million in the quarter under review, due to the forthcoming liquidation of KBC Bank Ireland. Consequently, when adding up the 4 quarters of the year, our full year net profit amounted to an excellent €3,415,000,000, slightly up year-on-year. On the sustainability front, we are proud to be included for the third consecutive year in the CDP Climate A list. This recognition highlights KBC's leading role in climate-related disclosures. Our solvency position remained strong, with a fully loaded Common Equity Tier 1 ratio of 15% at the end of December 2024. Our liquidity position remained very solid too, as illustrated by an LCR ratio of 158% and an NSFR ratio of 139%. Our Board of Directors has decided to propose a total gross dividend of €4.85 per share to the General Meeting of Shareholders for the accounting year 2024. That amount includes €0.70 per share already paid in May 2024, reflecting the surplus capital above the 15% fully loaded CET1 threshold per end 2023, and €4.15 per share, of which an interim dividend of €1 per share already paid in November 2024, and the remaining €3.15 per share to be paid in May 2025. When including the proposed dividend of €4.15 per share and additional Tier 1 coupon, the payout ratio would amount to approximately 51% of 2024 net profit. Lastly, we have also updated our 3-year financial guidance. Between 2024 and 2027, we are aiming to achieve a compound annual growth rate of at least 6% for total income and a compound annual growth rate of below 3% for operating expenses, excluding bank and insurance taxes. Furthermore, we also want to achieve a combined ratio of maximum 91%. In closing, I wish to sincerely thank all our employees for their contribution to our group's continued success. I also like to thank all our customers, shareholders, and all other stakeholders for their continued trust and support, and assure them that we remain committed to being the reference in bank insurance, innovation, and digitalization in all our home markets.